What's up, everybody? Welcome back to Learn-2-Earn. Today, we're diving into the world of stock trading and how you can potentially use it to build wealth. Creating wealth by trading stocks isn't just about picking the next hot stock tip, it's about putting in the work, educating yourself, and having a solid strategy. While stock trading can generate significant returns, it's important to remember that it involves substantial risk. Before you even think about dropping a single dollar into the stock market, you need to understand the basics. We're talking about market terminology, different trading strategies, and types of stocks. There are tons of free resources out there, from online articles and tutorials to YouTube videos. Trust me, the more you know, the better equipped you'll be to make informed decisions with your money. Before buying your first stock, ask yourself, why am I doing this? What are my goals? Are you looking to make quick cash? Or are you in it for the long haul? If you're aiming for quick profits, you might focus on day trading or swing trading. But if you're looking to build wealth over the long term, you'll likely focus on long-term investments and dividend-paying stocks. You need a trading strategy. And no, I don't mean blindly following some Reddit thread. Your strategy is your roadmap to success, and it needs to align with your investment goals and risk tolerance. Do your research, backtest different strategies, and find one that you're comfortable with. A good strategy should include both entry and exit rules. Choose a reliable brokerage platform. Don't get ripped off. To start trading, you'll need to open an account with a brokerage platform. There are a ton of options out there, each with its own set of fees, features, and user interfaces. Do your research, compare different platforms, and choose one that aligns with your needs. Risk management is absolutely crucial when it comes to stock trading. Every investment carries some level of risk, and it's impossible to eliminate it entirely. One of the best ways to manage risk is by setting stop-loss orders, which automatically sell your stock if it drops below a certain price. Another key aspect of risk management is diversification. Don't put all your eggs in one basket. Stay disciplined. Emotions are your enemy. The stock market is an emotional roller coaster. It's easy to get caught up in the hype and make impulsive decisions based on fear or greed. You need to stick to your trading strategy, even when things get tough. Successful trading is a marathon, not a sprint. Leverage compounding and reinvest profits. Make your money work for you. Compounding is the process of earning interest on your interest. When you reinvest your profits, you're essentially buying more shares, which means you'll earn even more dividends in the future. Over time, this snowball effect can lead to significant wealth growth. Now, for the not-so-fun part, taxes. Long-term capital gains, which are profits on investments held for longer than a year, are taxed at a lower rate than short-term gains. It's important to understand the tax implications of your trades and plan accordingly. The stock market is constantly changing, which means your portfolio should too. Regularly review your portfolio and make adjustments as needed to stay on track with your goals. If you're feeling overwhelmed or just want a second opinion, don't be afraid to seek advice from a financial professional. A good financial advisor can help you create a personalized investment plan and manage your portfolio. Creating wealth through stock trading isn't some get-rich-quick scheme. It takes time, effort, and a whole lot of patience. A well-thought-out strategy coupled with disciplined risk management is key to long-term success. Thanks for watching. Hit that like button, subscribe for more, and I'll see you in the next one.